Today we will be doing technical analysis on the S&P 500 for Monday, October 19th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for. And I will leave a link to their site in the description box below this video. Thank you for watching this video. My name is Rodney Constable. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps financial professionals and individual investors understand the current level of risk in the stock market as well as the trend direction, allowing you to make better, more informed asset allocation, investment, risk management, and trading decisions, all for less than $20 per month. Today, the S&P 500 was down 1.63%, and we closed at 3426.92. The first chart that we're going to look at is a one-day, one-minute candlestick chart of the S&P 500. So each candlestick does represent 1 minute of trading. And what we can see here is just shortly after the market opened up, we started to sell off and sold off for most of the day, and we closed near the lows of the session. Again, closing at 3426.92, down 1.63% for the day. The next chart that we're going to look at is an hourly candlestick chart of the S&P 500 that goes back for 2 months. So again, every candlestick represents 1 hour of trading. The blue lines are set at 3420, 3330, and 3210. These are the very important support areas below where we are currently trading, and they are most easily observed on these hourly candlestick charts, which is why we're looking at this in an hourly format rather than on a daily format. And we can clearly see, going back clear to the latter part of August, that we've had a lot of hourly candles that have traded right around this 3420 area, maybe stopping just a little short as we saw here in September. And then you can see here that we broke above the 3420 area back in the early part of October. And we have now once again pulled back to the top of this range. Now, of course, in technical work, prior resistance becomes support once penetrated. So the question here is the 3420 area strong enough, right? Has there been enough trading around this 3420 area over the last couple of months to provide enough support for us to stop right here and continue to go higher? Now, only time will tell, but I question that. Now, the only thing that may happen is if we get stimulus in the next day or two, that might provide enough of a lift to the stock market immediately to keep us from falling further. However, if we break beneath this 3420 area, then we probably will go down to at least 3330. And if 3330, and you can see, again, there was a lot of support around this 3330 area. But if 3330 doesn't hold, then 3210 would be the next stopping point. And you can see we came right down to that point and stopped on the 24th of September. And that's when and where this current rally started. So it doesn't surprise me at all that we came down to and stopped right at this 3420 area. And again, I would encourage you to go back and look at my videos from the last week or two and see what I've been saying. If you haven't seen those, please go back as soon as you get done with this video. Maybe go back and check that out because there's a lot of great information in those videos as well. So I would encourage you to do that. But for now, this 3420 area needs to hold up. And if it doesn't, 3330 and then 3210 are the next stopping points. Not only did the S&P 500 sell off, but pretty much everything was down today, okay? The DIA that tracks the Dow Jones Industrial Average down 1.42%. The IWM for the Russell 2000 down 1.25%. MDY for the mid caps down 113. The triple Qs down 174. The equal weighted ETF for the S&P 500, the RSP down 138, and the SPY, which of course tracks the S&P 500, down 160. And of course the difference between the 160 and the 166, which is the S&P 500 index itself, that's just a small amount of tracking error. And that's not uncommon at all. Now, stay with me here because this next point is super important. It wasn't just equities that sold off today, guys. High-quality bonds sold off as well. So let's take a look at a couple of ETFs that track Treasury bonds. The first one is the IEF, which is the 7 to 10 year Treasury Bond ETF. It was down 16 basis points today. and the TLT, which tracks 20-plus year duration Treasury bonds, down 0.39%. So any of you that have stock and bond portfolios, 60-40, 70-30, 50-50, whatever it is, this is a glimpse, I believe, into the future in that we're probably going to see bonds and stocks selling off together going forward. So what I'm telling you is the new norm, right, is that the 60-40, 70-30 portfolio is not going to work very well going forward. Not like when, the 10-year Treasury was yield 4.5 or 5, a dozen years ago. We've got a 70-some basis point yield on the 10-year Treasury, and there's just no way with bond yields so low, there's just no way that bonds can protect you, high-quality bonds can protect you like they used to with respect to the, offsetting equity risk in a portfolio, okay? And this is why I want to encourage you, please take a serious look at simple market signals because it will help you. It will help you address your risk, okay? So, guys, again, if you haven't seen my videos from this last week or two, please go back and take a look at some of the other videos that I produced over the last couple of weeks. Also, if you want to know more information about what I do, who I am, my background, whatever, I will have I have quite a few videos that are linked in the description box below this video. So if you haven't checked out the videos that I have linked in the description box below this video, today may be a good time to do that, okay? Get a little bit more familiar with me and what I do and how I can help you. Do you know the level of risk in the stock market on an ongoing basis? Simple Market Signals. It's like having risk radar for the U.S. stock market. Simple Market Signals is less than $20 per month. Simple Market Signals is for financial professionals and individual investors. What is it costing you to not have this information? To get started, go to simplemarketsignals.com.